I show this graphic when we're usually in a tough market, right? And I want to show you guys this so you kind of like get into the right mentality, right? Especially for a lot of you newbies, like I would say most of you guys watching this video, like you're already on this mentality, but for some of the newbies, you need stuff like this, right? Build a portfolio you'll be proud of years from now. 2, staying diversified is your alpha long term. If you want to know how you get through the bear markets, right? Those really tough ones, those major corrections, S&P 500 goes down 20, 30, 40%, 50%, whatever. The way you get through those markets, right, is you've got to be diversified across growth stocks, value stocks, dividend stocks. And you've got to own plenty of companies that are very high quality. High quality means they got business models that can make it through downtimes in the economy, high inflation, low inflation, high unemployment, low unemployment, whatever the situation is that's thrown at it, they make it through to the other side. That's how you get through a bear market, right? People that are over leveraged, under diversified, many of those people don't make it through the bear market to the other side. When we're talking about market cycles, you gotta thrive. You've got to be invested heavy into growth stocks in those bull cycles. But when you're going into a bear cycle, drama cycle, that diversification comes in clutch, I can tell you that. Growth, value, dividends, hedge, cash. We'll talk about hedging in just a moment, how I hedge personally. Conference calls are non-negotiable. Put in that research work. You know, the bad thing with up markets, the really bad thing with up markets where it just seems like the market's going up and up and up, it makes for lazy investors. Lazy bunch. An embarrassing bunch. A bunch that I wouldn't want to associate with. Disgust me. Lazy bunch. And why? Well, let's imagine you just get in the market and you throw some money in some stocks and it just goes up and up and up. You're like, oh, this is so easy. Oh my gosh, I should have been doing this like 100 years ago. It's so easy, right? You don't realize all the work that goes in behind the scenes, right? You're like a kid that joined a football team and you suck and you don't put in the work, right? But you get to win the games while you sit on the bench because all your other teammates are good. That's what we're talking about. Conference calls are non-negotiable. You got to listen to those babies. If you don't put up the time to listen to a conference call, you deserve to lose all your money. All of it. Every penny. You got to be willing to put in the work, right? And we always know the ones that put in the work always reap the rewards. It's the way it's always been. And the ones that are lazy, you need to do this. It's easy to make money. What do? You're going to falter. And you're going to falter big, and then you're going to look for somebody to blame it on, and at night, you're going to have no one to blame it on but yourself. And you're going to have to accept that, right? Conference calls are non-negotiable. Know your stock's financials. I bet you a lot of newbies in the market, if I ask them what the forward P is for XYZ stock they own, they wouldn't even know it. Right? Know your stock's financials. Know your stock's metrics. Outwork and outsmart everybody else. Buy the dip, never trip. Take advantage of those opportunities you get out there in the market when you're going through those tough times, right? Now, how do I hedge, right? Well, I'll hedge differently each year. So as far as this year goes, I'm hedging with some toll puts. How long I'll keep those on? I don't know. We'll see. Maybe it's a month. Maybe it's a few more months. I don't know. We'll see what happens with that, right? But because hedges can be very active, might be in it one day and out the next, right? Because these can move huge. Like this one's already moved 40% up for us, $12,000 up, right? So I'll do stuff like that, right? Because I know a stock like Toll, if the market gets shaky, a stock like that's going to go down substantially, right? But then I'll also hedge with cash. I'll hold heavier cash piles in time periods when, it's great times. And I'm saying, you know what, let me have some cash here as well. So I might just go a little bit more heavy cash. And that's something you can do to help hedge. You don't always have to worry about buying put options and those sorts of things and trying to figure out what the perfect company to bet against is if the market goes down, blah, blah, blah. You don't have to play that high level of a game. You can play a game of just like, I'm going to hold a little heavier cash. Where people get into trouble is they go too heavy cash. And then they end up in a dilemma. And I see this time and time again from sometimes people that have been in the market even several years. They'll go too heavy cash. Market keeps going up. And what happens? Even those investors get FOMO. And next thing you know, like, crap, man, I got to pile money into something. They start getting FOMO. And next thing you know, they're piling it right back into the market, right? At much higher prices than what they bought before, and then the market will dip right after that, right? And then we'll have a major correction or crash in the market. And oh my gosh, I knew I was right being on the sideline. It's like, no, you were wrong because you tried to play out. Instead, you just screwed yourself twice, right? You could have got screwed wrong. You could have got screwed once, but instead you screwed yourself twice. You could have just held through, market dips, blah, blah, blah. Okay, you make it through the other side, survive the bear markets. It is what it is. It's part of being an investor. Bear markets are part of the process. You're going to be down sometimes. Boom. But instead, you screwed yourself twice. You sold at a bad price. You then had to buy back in at much higher prices because you got FOMO. And next thing you know, after that, you went down much more substantially than you would have, right? And you probably had to face tax implications on all that, right? At the end of the year, which is just a whole other brutal situation to go through. And so then you might need to pay those taxes with money you just went down massively on after you bought at crazy prices. Talk about really getting screwed. This is why every great investor will tell you, don't time the market. Invest over time. If there's certain time periods you want to be a little heavier cash or a little heavier hedge, okay. But don't try to time it in terms of I'm going to sell all my stocks, sell a big portion of my portfolio, I'm selling half of it. Okay, that usually just works out very, very bad. I've never seen it done where it's done properly. Like it always ends badly for people, right? So next question is, what stocks will investors fly back to? Right? Once this honeymoon wears off that we have in the market right now, and a lot of optimism and hope, whenever this wears off, whether it's February or April or May or the summertime, whenever the honeymoon wears off, like where are people going to look, right? Here's where they're going to look. They're going to look to companies like Elf, right? Elf, cosmetics company. This is a sort of company that actually, for the past year or so, a lot of people haven't wanted. They're like, cosmetics, makeup, beauty product, put me to sleep. It hasn't really been the play, right? But as soon as things start to get a little shaky and you're not in a honeymoon time, people start to say, oh, I want needs-based businesses. Oh, I love makeup. Like, people are going to buy makeup regardless. Whatever's going on in the world, tariffs, no tariffs, inflation, no inflation, people are still going to buy their makeup. And we've seen that with Elf's numbers over time, right? They're still going to buy beauty products. They're still going to buy foundation and lipstick and all that stuff. So, Elf starts to catch a bid, right? Nike, they've made it through decade after decade after decade after decade, and emerge stronger and stronger each time from every single down cycle. And people are like, at the end of the day, people got to buy shoes. They got to buy hoodies. They got to buy clothes, right? It's just part of life. And so Nike being this catch bid, great value, great dividend stock on that one, right? They start to say, you know what? Regardless of what's going on in the world, stock market crash, no stock market crash, whatever, people are going to drink their energy drinks. They're going to drink Celsius. They're going to drink Monster. And so stocks like Celsius, Monster, those ones which have not been the play for the last year or two, right? Look at Celsius stock the last 2 years. Look at Monster stock the last 2 years. Those haven't been the play. People haven't wanted to be in energy drink companies the last couple of years. No. They want to be in NVIDIA last 2 years, right? They want to be in more growth-related stuff. They want to be in Bitcoin. But as soon as things get shaky, then people say, dang, I drink a Celsius every day. Maybe I should invest in that company, right? They start to look back to those sorts of companies. Cheesecake Factory, restaurants, right? People still got to eat. They still got to eat. They're still going to want their dang cheesecake. They're still going to go to North Italia. They're still going to go to Flower Child. Like, at the end of the day, people are getting lazier and lazier and lazier when it comes to cooking. Restaurants continue, especially the top-tier restaurants, continue to do better and better numbers over time, right? They'll pile into stocks like that. Great dividend yields on those ones. Honest, HNST, stocks like that. Beauty products, lotion, soaps, diapers. Well, regardless of what's going on in the world, you got to buy your baby diapers, right? So these stocks begin to be the play, right? If things get a little more shaky and a little more uncertain, like what's going on here? Like, I don't know, right? So in honeymoon times, which is kind of what we've been in for the last, I would say 2 years, in kind of like in even a bigger honeymoon phase right now, Bitcoin, high growth stocks, story stocks, those sorts of things are really what does very, very well in honeymoon times, right? Now, when things start to get a little shaky, you start to get a little more uncertain in the market, value stocks, dividend stocks, the dividend yield, right? Needs-based companies, cash, those ones start to become the plays, right? That's where money starts to move. And so when things get more uncertain, money moves out of Bitcoin, money moves out of high growth stocks, out of story stocks, right? And start to move into these sorts of places. And dividend stocks definitely catch a bid during those times. Like if you look at a lot of dividend stocks in 2022, actually a lot of them held up very, very well. Like it was an extraordinary how well so many of those dividend and value stocks held up in 2022. While tech stocks are just getting obliterated. NVIDIA, Meta, go through the whole list. They all got wrecked, right? AMD, Netflix, Shopify, the whole list of them. They're all down like 40, 50, 60, 70, 80%, right? And meanwhile, a lot of those value and dividend stocks were hardly down in 2022. Some of them were even up. And it's like, how? With the market getting leveled like it is and some of these value, because you're in a different market at that time. You're more uncertain. People are like, I don't know what the Fed's doing. I don't know what's going on in Russia. I don't know, blah, blah, blah. I'm uncertain. Where am I going to go? Treasuries. I'm going to go dividend stocks. I'm going to go value stocks, right? Needs-based companies. A lot of those catch up in during that particular time, right? So you just got to understand the game and how it's played and the rotation of money. And you got to understand also who dictates the market. Who dictates the market is the big funds, right? The big institutional investors. Like those ones are the ones that really dictate the market. And so those ones are ultimately the ones that are going to kind of push whatever stocks are. Like if the big money wants to push Bitcoin and high growth stocks and story stocks, they'll push those. Like it's not rocket science. At the same time, if that big money also starts to flood out, right? You as a retail investor who's got $100K in the market or $1 million in the market or a few million, like you're not doing anything. I'm not doing anything in the market. I'm part of the 1% and I'm not doing a damn thing in terms of me shaking the market. Like it just doesn't work like that. I don't have enough money. You need to have many, many billions of dollars in a fund or something like that to really matter at all in terms of what happens with Bitcoin price or what happens with growth stocks or story stocks or any of that, right? So, and at certain times, this is where money floods back to, and people say, I can't get gains in NVIDIA right now, so I'm going to flood into dividend stocks, right? And so, but that happens after the honeymoon phases. We're still in the honeymoon phase. You've got to understand that. So these are still the play. Until the honeymoon phase breaks, whether that's, once again, 3 months from now or 6 months or 9 months from now, it's going to break at some point. Once that breaks, boom, these are no longer the play. Everybody's going to flood out of those, right? And then money's going to flood into these sorts of things, right? And so I warned you guys about everything that was coming here, right? These 3 videos here. I warned you guys about this thought process of people trying to sell out of stocks, thinking the market's going to crash, and now they just missed out on a crazy amount of gains. I mean, crazy, right? I warned you guys about the great melt-up beginning. I warned you about that we have a stock market melt-up 2.0 was coming, right? And this is how everything has played out. And so now I'm just trying to get your guys' mind focused on 2025, right? I'm trying to get you to understand what's likely going to transpire in 2025, that we're going to have kind of this end blow off top honeymoon phase, and then we're going to start to get some drama. And it doesn't mean that's the end of the bull run necessarily, right? Because we could, if we're on a 5-year bull run, like even if we get some drama, all it's going to be is, 2 to 6 month drama. And then the market's going to start to move up again, right? And it's just a big buying opportunity. So that's just something to keep in mind there, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Cheesecake Factory. Big buy for me in regards to cake. 555 shares of cake. That's a $27,425 move. That's I bought those shares at $49.41. Now, very important in regards to this. In regards to cake, right? I'm raising my cost basis substantially by keeping on buying the stock at these sorts of prices, right? Which shows such a huge vote of confidence. It's one thing to buy a stock that you're down on, right? Like, let's say, for instance, like Nike. I think I'm down 9% or 10% in the public count on Nike stock, right? It's one thing to see me buying Nike stock because it's like, oh, it's pretty easy. Like, you thought it was a deal here. It's 10% lower. Like, it's an easy buy, right? It's much harder, at least for me personally, to buy stocks I'm already up 20% plus on, right? And to keep raising my cost basis. And so for Cheesecake Factory, right, even after the offset of the new cost basis, I'm still up 29% on the stock, up $31,000. That does not include dividends. So then shows definitely, I think, a vote of confidence for me on how much I believe Cheesecake Factory is deeply discounted right now, right? Now, additionally, I want to show you guys the dividends here, because right now Cheesecake's paying out 27 cents per share you own in regards to dividends. I believe they are going to up that amount in 2025, maybe to 33 cents, 35 cents, 40 cents, something around there, right? But for right now, they're paying 27 cents, right? So now in the public count, I have 2,777 shares. So they pay me 27 cents per share I own every 3 months. So that means I'm going to make $749.79 just in the public count alone every 3 months from the stock. And that does not include the likely dividend raises that this company is going to be doing over next year and likely following years as well. That means I make $1,500 every 6 months from Cheesecake stock, and I make $3,000 per year. Obviously, the biggest money from the stock is going to be in share price appreciation over time, but it is sweet to collect those dividends and always have that dividend money incoming. And then guess what I do with that money? I redeploy it into more Cheesecake Factory shares or more shares of other stocks that I see as huge discounts, right? That's where my strategy GVD comes in clutch. Growth stocks, value stocks, dividend stocks, right? And these dividend stocks, you know when they really come in clutch? And I don't think this gets talked about enough. And one of the reasons I value these dividend stocks so important, bear markets. Guess what? Bear markets, it's hard to make money in any stocks, right? Bear markets, like the only thing that's really printing money is put options and hedges you have on. And that's it. And so it's very difficult to make money in bear markets unless you got the timing right as far as betting against that bear market, right? All your stock positions, all your long positions are probably going negative. It's just a question of how negative are they going, right? If the market goes down 30%, let's say S&P 500, and some positions for you are only down 15 or 20%, you're winning, right? That's a win. Like you're outperforming the stock market. But at the end of the day, it's still down. So it's nice when you have that dividend money incoming in a bear market, right? You can redeploy that money out there into stocks at deep discounts. Remember this, folks. There's a reason. There's a lot of reasons why I own some of these dividend stocks. They come in clutch, man. They come in so clutch. Now, Cheesecake's my favorite small cap stock for the next 5 to 10 years. And that's why I don't mind buying more shares and upping my cost base. I don't care because it's still such a great deal. They got the Cheesecake Factory, which is their ATM machine, right? Additionally, I have North Italia and Flower Child, which are smash concepts. Flower Child's probably the biggest opportunity for the company since Cheesecake Factory. And if you combine North Italia and Flower Child, I believe in 10 years from now, we'll look, probably even 5 years from now, and we'll be like, whoa, those two opportunities in itself was bigger than the Cheesecake Factory. Bigger than the Cheesecake Factory, if you combine those two, right? And then we got several different concepts that are in testing phase right now to see if those are the next big North Italias and Flower Childs around the United States of America, right? I spoke about this stock quite a bit recently. I did not include it in my six stocks to buy and hold forever video, right? That came out last week. I honestly probably could have. When you think about Cheesecake and you think about them making it through Rona, you think about them making it through the great financial crisis and all the crap they've made it through, I could have probably included in that video, but I did not include it in my 6 stocks to buy and hold forever. But I just thought I probably could have, honestly. If I recall, Cheesecake was the first stock, or certainly one of the stocks I mentioned on 5 Stocks I'm Buying December edition. So if you guys haven't got a chance to check out that video, you might want to check that out when this one's over. 5 Stocks I'm Buying December 2025 there, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Next stock I bought here is the Monster. MNST. Obviously, I think everybody watching this should know Monster. They're a massive energy drink company. They own the Monster brand, which the amount of drinks they just have in the Monster brand is insane. They own Rain Energy, Bang Energy, and several different other energy drink brands as well. They're like the big dog in the space other than Red Bull, right? Like them and Red Bull pretty much dominate the energy drink industry around the world, literally. Now, when it comes to Monster, I added another 111 shares here. I paid $52.62 for those particular shares. And the reason I did that is because I've also been buying Celsius in the public count. Now, I'm doing a $2 to $1 ratio in regards to Celsius versus Monster. So I put about $57,000 into Celsius, and I've had my 2 to 1 ratio almost perfect. Now at this point in time, right? I have put $29,000 into Monster. Now, the thing I'll say about Monster and Celsius is I wouldn't expect me to continue to buy these stocks very heavy, unless they go down big. Like if Celsius goes back to $25, which I have doubts it's going to go back down to $25 now that I think tax loss harvesting's over in regards to this one, at least the major tax loss harvesting, or Monster was to go to like $45 or below, I think I'm pretty good on the buys here. But, you know, if these ones went down in any substantial way, you'll see me continue to buy them. So that's kind of where I'm at here. If you add up the amounts, right, I have invested, you know, we can call it roughly, you know, $100,000 or just a little under $100,000 invested into these two stocks. So I'm good with what I have. But if they went down a bunch, I wouldn't mind adding some more shares. These are the type of stocks that I feel comfortable holding in recessions, holding in good times, good economic times, bad economic times. Like, you know, like people are still going to drink their dang energy drinks. That's just the way that's going to be, right? Next stock I bought here might come as a surprise. I haven't been buying the stock recently. So this is going to be a big one for a lot of folks, I think. I bought Planet. I bought the Planet. Yeah. 29,000 shares. By the way, it took a while to fill that order. Like, it was incredible. It took, like, I think several minutes to fill that order. It's just 29,000 shares. I didn't even think it was that much. I paid 38 cents a share for the Planet shares, right? That was about $11,000 move. Now, you know, in regards to Planet, I understand, like, the whole MJ space has been so negative for the past several years. No one's wanted any of these stocks and those sorts of things, right? And then a lot of votes didn't go the way people wanted them to go in regards to Florida legalization in this space, right? The government's moving slow. Federal legalization, we're still waiting. Descheduling, we're still waiting. Like, you know, it's just been a pain. And that's why these stocks have just, you know, not done much the last couple of years. But I think people are too negative on the space. And I think there's actually some things to be pretty excited about. When we look at Planet's balance sheet here, this is as of their latest quarter. They had $27 million plus in cash, which for a company Planet's size is actually a significant number. Total stockholder equity is up to $150 million in this company now at this point in time as of the latest quarter. Excuse me. Now, if you look at their latest financial results, they're showing a lot of improvement, folks. I mean, a lot of improvement. And it's actually improving rapidly here. If you look at their September 2023 quarter versus their September 2024 quarter, their gross profit went from $11 million to $16.6 million. That's substantial, folks. Run the math on that. Last time I checked, that's around a 50%-ish range improvement, is it not? Huge. Their gross profit's exploding to the upside, and I don't see that really slowing down anytime soon. Now, additionally, if you look at loss from operations, it's $3.3 million, right? Which looks like a big number, fair, right? But keep in mind, depreciation was $2.3 million of that. That's a non-cash expense, depreciation, right? So the reality is it's not as bad as it looks, right? If you look at their loss before provision for income taxes, $2.9 million. This versus depreciation of $2.3 million. So we're talking about only about a $600,000-ish real kind of loss before income taxes there. So the Planet's balance sheet and income statement are actually in far healthier spots than I think the stock reflects. Like looking at the stock price at 38 cents, you would think this company's just done. They're done. And then you start to look at the balance sheet and the income statement, and you're like, I don't know about that, right? So the moral of the story is here in regards to Planet, things are getting much better for the stock, and I don't think that's going to stop anytime soon. I think things are going to continue to get better for the Planet for honestly at least the next several years. And so I think they're going to eventually get to a profit from operations here, likely in not too distant in the future. And then how are you going to keep Planet down at 38 cents when they start having a profit from operations? Like, that's just not going to make sense anymore at that point in time, right? There's too big of a long-term opportunity in this space. We know there's a massive amount of Americans that use this product, right? That's not changing. And so likely the Planet's going to be one of the biggest beneficiaries, and they're taking advantage in a very down market because a lot of the players in this space have gone BK or they're in rough positions, and the Planet's acquiring assets right now for very cheap prices, and they got the balance sheet to pull it off. And they also are there with the way their income statement's trending and the way that, I mean, if they start pulling in $20 million plus a gross profit, it's going to be hard for this company to keep losing money in terms of a loss from operations. Like, it's almost going to be impossible. And then if they explode that up to 25 mil or 30 mil, the stories could get very exciting very quickly here, which is why I'm just willing to take a little risk here, right? Now, in regards to Planet, right? You know, anything that's a spec stock, you always got to keep in mind with spec stocks and hedges, don't risk the farm in these stocks. That's where people get into trouble with these, is they risk too much money. If you look at how much money I risked in the Planet, it's like, if Planet didn't make it, if they went under, it's not going to like magically change my net worth. It's not like, oh, that, you know, I'm done for. I wouldn't even notice it, to be quite frank. But if Planet is really that opportunity, if they're that 10x, 100x opportunity, right? I will notice that. I can tell you that much. Because that 1% position in the public account, if they 10x or 100x, it's going to become a whole lot bigger than a 1% portfolio position, right? Without me buying another share. So that's what I do with these spec stocks. I treat them as like, if it's really that crazy opportunity, I want to make so much money off of a very small amount put in, it's going to be ridiculous. And if I don't, right, and they go under, it's not changing it. Like, it's not like, oh, I can't run my fountain. I better shut the pool fountain off because I can't afford the electricity. I better not run the spa because I can't afford the natural gas, the heat on that. No. It doesn't mean a thing, right? That's how you want to position in a spec stocks and hedges. If it works, it's going to print money. If it doesn't work, oh well. It's not like you're going hungry at night, right?